All right. I hope now you can see the screen. And last time we discussed about debentures as an external source of finance. We did discuss about factoring of debts as well. Okay, let's move on. Uh, so bank loan, we discussed it, and then debentures, we did discuss that as well. And now this is factoring of debts, right? Or debt factoring, we can say that. And I told you that factor is actually a specialized or a specialist agency which buys the debts of people or other businesses. That means that they pay it on the spot and then they collect it from the other people on behalf of that person. But they do not pay the 100% amount, and that is their earnings or income, you can say. So debt factors are specialist agencies that buy debts of firms for immediate cash. They may offer 90% of the existing debt. So it means 10% would be their income. This is how they earn. The debtor will then pay the factor, and the 10% represents as the factor profit, right? So this is now understandable because we did discuss that in the last class. So now let's take an example to give you a better understanding. Now let's say there are three you can say entities: client, customer, and MFC, right? So what happens that the factory delivered goods to the customer and valuing $100. That is the invoice. Okay, but customer is yet to pay it, right? So after some time, the factory owner or the client actually approaches MFC. MFC is actually the debt factor. Okay, remember that is the agency. So they actually they provide the copy of invoice to MFC, okay, and tell them that we have sold goods to the customer, and customer is the amount will be paid after 3 months time. But I want cash right now at the end of the first month. So they say, all right, they collect the invoice from the client or from the factory owner, right? And they will keep it with them. Then what do they do? They will provide $75 immediately to the client or to the factory owner, right? So $25 will be the profit of the debt factor. That is MFC, right? That is the name, huh? Simple, the name of the company. And then later on, MFC will present that invoice to the customer, right? And then customer will pay the amount to MFC rather than to the client. Why? Because now MFC can show it, can prove that now I am to collect that amount. Okay, it's not the client who will collect that amount because I have given the amount to the client. Now I do have the invoice, the bill, so you are supposed to pay it to me. So they collect it from the customer. So I told you advantages that one immediate payment is made, and the tension of getting the money from the customer is no longer with the client or the factory owner. Okay, any question regarding this example?
Sir,
No
I,
issues at all?
sir, I couldn't
Yes,
understand.
Mana.
Can you repeat that again?
All right. Okay, listen. Mana, I just told you that there are three different entities. One is the factory owner. We named it client. The other is the customer. Okay. And the third is a company, which is a factor. Means that they buy the debts of other companies or individuals. Now, what is happening that the factory owner or the factory or the client, they produce goods and deliver it to their customer, right? And the value of the goods is $100, right? Customer is not going to pay because the goods were delivered on credit or sold on credit rather, right? So customer will be paying it after 3 months time because the credit period is 3 months. But after 1 month, the client is in need of immediate cash. But obviously, customer is not there to pay it because customer will say that is the agreement. I'll pay after 3 months. So now client has to find the factor. That factor. Okay, and that factor is the specialist agency which will resolve the issue of that client. How? Client will show the copy of invoice to MFC that I have sold goods to the customer and customer is yet to pay that amount and it will be paid after 3 months. So MFC will, that is a specialist agency, will say to the client, okay, I'll pay you cash immediately, but I won't pay you $100. That is the full value of the goods and services you sold. I will pay you $75 only, and $25 will be my profit or income, right? Later on, okay, so it means that the issue will be resolved as far as the client or the factory owner is concerned, right? Now, later on, after the end of 3 months, MFC will be collecting the amount that is $100 from the customer. All right. So I think there was some glitch on my part, rather at my place. All right. So now the payment will be sent by the customer to MFC because MFC will prove that now I am there to collect that amount. Okay. So this is how this transaction is done, which we call debt factoring or factoring of debts. Is that clear, Mana?
Yes, sir.
All right, so moving onwards. Now, see the advantages. I'll just mention it quickly. Immediate cash available. Release the risk of collecting debt. Now, you need to understand, if it is written immediate cash available, you need to develop that point. You say whenever you are required to meet expenses immediately, this is the most suitable source of finance because you can get it immediately. Release the risk of collecting that I told you earlier because it's easy to lend money, it's easy to sell goods on credit, but it's not easy to get your money back. So now it is the tension of the debt factor, and business can focus on their main activities, that is the production of goods. Now they do not need to think about how they will be collecting payment from the customer, right? So this is an advantage. And disadvantage, firm does not receive 100% value of debt. I told you earlier. They actually get 90% or 95%. The rest of the amount is the profit of the debt factor. Then we have grants and subsidies by outside agencies. We discussed that as well. So government normally provides the subsidy or the grants to the businesses, right? Advantages, repaying you will not require. Okay, yes, government is paying you, so you do not need to return the amount. So huge relief for businesses, especially for smaller businesses who are not in a position to pay the amount back. But strings attached, and I told you earlier, string means that there are conditions attached. They might say, the government might say, all right, we are providing you the amount of money you require, but you will be relocating your business in a particular area. Now, why do governments say that? Why does government say that? The reason is because government wants to increase the employment in the country. That is one of the objectives of the government. You know that. If government feels that there in one area there is huge level of unemployment there, and people are very poor, so government can ask them, locate your business over there, and so that people can get employed over there as well. But it might not be in the benefit of the business. Business might not get enough customers in that area. But because now the government is saying and government is giving you the money, you are bound to follow the instructions of the government. And that might not be in the benefit of the business in terms of revenue and profit. Yeah, any question? Mana, Zainab and Hamna?
No, sir.
All right.
No, sir. No.
Okay, thank you. Now, this is important. Microfinance. You need to understand, micro means small. Okay, so now you all have my notes because I did share that way back of the same chapter. That is chapter number 22. Do you have the soft copy of my notes? All of you?
Yes, sir.
All right. Zainab and Hamna.
Yes, sir.
Yes, sir.
All right, good. So you can read it from there as well. And if you have any problem, you can tell me in the next class. Now, micro means small. Remember, microfinance is provided to poor people to whom banks hesitate to lend because of the following reasons. One, unprofitable to lend such a small amount. Now, why are they? Why? How is this point valid? Now, for example, if you are giving small amount, the interest rate that will be earned by the banks that will also be quite insignificant. It is better to give a large amount to one single big business so that you can get a higher amount of interest as well. So that is why they think that it is not profitable giving 10,000 rupees or 50,000 rupees as a loan. It is far better that you collect the whole amount and you give, let's say, 50 lakh rupees or let's say more than that to one big business, because now you will be getting a more amount in terms of interest, right? And you do not need to look for customers whether they are paying it back or not. Now there is only one business who have borrowed money from you, so it's easier to track that business, right? Otherwise, if there are 3, 4, 5, 6, 10, 20 smaller businesses to whom you have borrowed money, a very small amount, it's not that easy to see whether they are paying it back or not. So have a check and balance on all those businesses. This is not that easier at all. It will increase the cost of the business. Look, for example, following it up that whether businesses are paying or not, you require employees, and it will increase the cost of the business if you have more employees. So rather, if you are lending money to one big business, now you do not need more employees, and it's easier to follow it up as far as one business is concerned. So you can easily interact with them and tell them that now this is the time for your payment. Otherwise, if there are 20, 40 smaller businesses, so it's not that easy to keep them informed that now there is a deadline, you have to pay the installment of your loan. Next month again it's due. So it's not that easy to remember. And again, it's not that easy to collect money from such a large number of smaller businesses, because smaller businesses sometimes are not in a position to pay it back. They sometimes linger it on. They delay their payment. So now imagine that now it becomes even more difficult to remember that which customers have paid and which customers have not paid and how to get money from them. So it means this is an extra struggle that would be made by the bank. So banks can wants to avoid that, because this is how it becomes unprofitable, because it will increase your cost. You will hire more employees and you won't be able to focus on your main job, that is banking or lending money to other businesses, because now your money is stuck and smaller businesses are not able to pay. They are delaying it. So this is one reason. Second, do not have any asset as a security. I told you earlier. And why it is required? Anyone of you who can explain me that?
Sir, the bank has takes an asset as a security, so that when the customer or the person who is taking the loan, he does not have any money, so they can use the asset in order to cover up the money they gave to the person.
Yeah, very good. That's right. Very good. Absolutely right. So because smaller businesses, they do not have any surplus asset or some kind of an asset which they can actually give it to the bank as a security. So banks feel that it is risky to lend money to them, because if they won't pay, how would they be able to get their money back? So that's why they don't lend the money to smaller businesses. Then may not be able to pay it back. Yeah, high risk again, because even if the security is there, remember, even if the security is there, smaller businesses, they close down quickly. As soon as they suffer loss, they are not able to bear even a small loss. So they close down their business. Now imagine, even if they have the asset of the business, so let's say they have lent money to 20 smaller businesses. Now, if they start selling the assets of those 20 smaller businesses, it will be too hectic, now. Now, how would they be able to focus on their main banking activities? They will be focusing on selling those assets, and you know that it's not easy to sell assets quickly. It takes time. You need to find customers who will be there to buy your product, buy your assets. So it means, so again, it's not that suitable that even if they offer a security, you know that the chances are there, even if they suffer a loss, they won't be able to pay it back, and then you have to sell their assets, which is an extra burden on banks, because now they cannot focus on their main banking activity. Yeah, any question regarding microfinance?
No, sir.
Sir, it's clear.
Right, good. So that's why whenever you define this term, you will say it is available to poor people because traditional sources of finance are not available to such people. Now, traditional sources of finance means banks. Simple as that. So banks usually do not offer them any kind of loan as we discussed. All right. Now another term, crowdfunding. You need to understand that as well. And why the word crowd is there. Funding, we understand. We are getting funds from crowd. We are getting finance from crowd. Do you know why we are saying crowd? Because crowd means, whenever we use the word crowd, it means unknown people. They are not your relatives. They are not your friends. They are not the people who are closer to you or to whom you interact on regular basis. So that is why we call them crowds. Unknown people become a source of finance for your business. Okay, how it is done? Let me show it to you. So crowdfunding, let's see the definition. It is a way of raising finance by encouraging a large number of people to invest small amount using internet and social media. Okay, so this is becoming a popular way of raising finance, which with increased use of internet. So now remember the key part is you collect a small amount of money from a large number of people. Now this is very important. You collect a small amount of money from each individual, but there are lots of people who actually provide you the amount of finance. So small amount comes from each individual, but when you add them together, it becomes big. That's why I'm saying you collect a small amount of money from a large number of people. So in total, it's a huge amount. Now, so how do you collect it? Because you do not know those people. I told you that crowd means unknown people. So how do you collect it? There is a platform there. On internet, there are various websites. One of the website is Kickstarter. You might not have heard it, but you can Google it later, right? Kickstarter. Now, what is it? You need to get it registered on that website as a business, and you need to float your idea. Okay, you want to start a new business, so you tell everything about that new idea. People who are interested in investing their money, okay, in such kind of business, they start investing. Now, why it is not that risky? Because that website is involved there, right? So it is a kind of a guarantee. Now, it means all the details of the business who is actually floating that idea of a new business, their information is with that website owner, right? Now, people deposit their money through that website, okay? They provide the finance to the owner if they like that idea, right? And after collecting a certain amount which is required, they can use it. For example, they require 10 million rupees, for example, to start a business. There is an idea. So if people see the idea on that website, let's say Kickstarter, they keep on investing their money through that website, right? And as soon as the whole money is collected, that is 20 million or 10 million, sorry. So now the person can get the amount and can start that business with the same idea. Again, you need to understand, it is a very good way to start a business. Why? Because it's not your money. So you are at a minimum risk. Okay, you might have your own money, but maybe a very small amount. The rest of the amount you are getting it from the crowd, right? Now, but there is a problem. If you are unable to collect the amount which you actually required to start the business, let's say 10 million, you let's say get 5 million from the people. 5 million, you cannot start the business. Why? The website won't release that money to you because you require 10 million. It means you have to give the money back to the people. You cannot use it for any. You can't say that, okay, I have collected 5 million rather than 10 million rupees, so I can maybe start another business which can require relatively a smaller amount. No, you can't do that. Why? Because people have given you the money for that idea which you floated on that website. Now you cannot start a business with a different idea using the amount. You have to pay that money back to the people because this is what you can say. This is a kind of a deceit. You cannot deceive people that you are actually going to use that idea for a business and now you are going to use another idea because that much amount was not collected. No, you will have to return that amount to the people, right? So this is how it is done. And after, let's say, you collect 10 million rupees and you start your business becomes a success. Now you have to pay the share of profit to the people who contributed for that cause. Okay, obviously the share of the profit will be on the basis of the amount the people have provided for that business, right? So they will get their share as well. All right. So any problem regarding crowdfunding if you are not clear?
No, sir, no problem.
It's no
No,
problem,
sir.
sir.
Zainab and Ham. All right. Great. Great. Fine. Okay. Then we have now, if you see the advantages. Should I write? Okay. Is there a need to write the key elements of crowdfunding, or it's because I actually wrote that in the notes as well. So okay, all right. Let's move on then. Advantages: fairly quick method to raise finance. I told you yes, because you collect money. Website is there, na? So it is possible that you might collect the money very quickly because a lot of people might be interested in investing in that business, having the idea you floated there. They can be used when traditional methods to raise finance are not available. Like banks normally hesitate to lend money to people who come up with a new idea. Do you know why? Anybody? Why banks hesitate to lend money to a person who is going to start a business with a new idea? Why?
Sir, because it is possible that idea won't be successful in the future and they might lose all the investment.
Very good, absolutely right. Because great amount of risk is involved. There is no past track record of that business. So it's a new business. People may like it or may not like it. So complete uncertainty is there. So that is why it's highly risky for the banks to lend money. That's why traditional methods of raising finance are not available. So this is a suitable source of finance for such businesses. Okay, people's response may help in evaluating the idea. Yes, this is also a very good advantage of this source of finance. You know how? Let's say you start a business with an idea. For example, just forget about this source of finance. I'm just giving you an example. You start a business with a different idea, and after spending money, you realize that this idea is not going to work. Now, can you just reverse it? Obviously not. You have invested money. Now, obviously, you have to suffer loss on it. Even if you close down your business, the money you have invested, you cannot get it back, right? But in case of crowdfunding, what happens? Because you were not very sure at the time whether people will like it or not. But after investing money, you realize that people did not like the product or the idea, right? But in case of crowdfunding, before investing money or before starting your business, you first float the idea. Na? So if let's say lots of people are giving you money, and you actually require 10 million and now it's 20 million. So what does it mean? It means that your idea is gonna work. Simple as that, because those people will be later become the consumers as well. Those are from the community, right? So, but if you are not able to collect the amount, for example, the amount required is 10 million and you only get 2 million even after 2 years, 2 million. So it means that it is better to drop that idea because it's not only about that you do not have the required amount. One of the biggest reason is that this is not going to work because majority of the people are not interested because they think this idea cannot be successful. So without investing money, without taking a risk, you can get feedback from the people as well, whether this is going to work or not, right? So this is poor response means bad idea. So better to drop it rather than investing money in that or to rather than implementing that idea by setting up a business. A certain percentage of the amount collected is given to the owner who provides the platform for it, but only when the whole amount is collected. Right? Yes, but if the whole amount is collected, then if you earn profit, you will actually give the share to the owners as well. I explained you that earlier as well.
Sir,
Yeah,
can I go for one disadvantage if we are already on that base?
yeah, please, yes.
That the crowdfunding platform may reject entrepreneurs' proposal if it is not well thought out.
Yeah, absolutely right. So it means that maybe you wait there for several months, but nobody actually is willing to invest money in your business with the idea you floated there. Yes, so it might not work at all. Yeah, that's right. So now may not be able to attract people to invest at all. You just mentioned this, so I'm not going to explain that. Media and publicity need to be involved. Yeah, because you need to promote that even if it is on the website, you need to promote that. Because if media is not there and media is not telling that this is a new idea there, how would people come to know about it? Because all people are not familiar with those websites which actually float the idea, right? Like I told you Kickstarter, you do not know about it, right? There are other websites as well. But so promotion is required through media, either newspaper, TV or radio or any other medium which can be helpful in promoting that idea so that maximum number of people can get to know about it because then the chances of getting the investment uh, increase. So then competitors may steal the idea and develop the products early. Yeah, you float it on the internet, so your competitor can check that internet as website as well. No? So if your competitor has the investment already, so obviously they will actually start working on it way before you. So by the time you will collect that amount, they might have developed that product way before you and they might release that in the market earlier. People start buying it earlier. So now it means when you will develop that, it won't be considered as a new product. And already people are buying from your competitor, so they won't buy from you, or they may not buy to the same level you were expecting. So that is also a problem that your idea does not remain a secret. It becomes an open secret. Everybody knows about it, even your competitors. Then, if the required amount is not raised, then finance has to be given back to the investors and business is left with no money. I told you earlier, right? You cannot use the amount for some other idea. No, that is not possible because people actually give you the money, gave you the money for that particular idea which you floated that on the website. All right. So now that we have the time period of finances, um, we'll be talking about them, but not today because only 10 minutes are there. We'll be continuing that in the next class, and I will try to cover that very quickly, right? Because then in the next week we will be into the past paper question practice as well. That is very very important for you. So, any question from your side?
No, sir.
Right. So Zainab, Hamna, and Manha. Remember, you need to read that chapter carefully. I will be finishing that quickly in the next class, or maybe one more class, and then you will be telling me what to write because now you know how to attempt questions, especially paper one question. So right now we'll be focusing on P1 style question, and you will be guiding me, and I will be writing answers. I will be making necessary amendments in that, but you will be the major contributor while I will be writing the answer, right? So get ready for that as well. That will be a very useful exercise for you people. All right. So
Okay,
thank you
sir.
very much. That is all. I'll see you in the next class.
Allah Hafiz.
Khuda Hafiz.